Charles, let's start off here with the valuations. I mean, we knew the valuation was going to probably be, at least in the eyes of investors, more comparable with an NVIDIA, more comparable, I guess, with some of the more sizzling AI names. But you're saying it should be valued maybe more along the lines of a Cadence or a Synopsys.
Yes, that's correct. I think the whole idea about ARM, NVIDIA being a COM to ARM is kind of is a misperception about where ARM actually sits in the semiconductor supply chain. NVIDIA is a hardware company, and ARM, they actually provide the IP, which is actually the easiest way to understand. There's a bunch of software codes. So they actually sit at the same place as Cadence Design Systems and Synopsys, which happen to be number 2 and number 3 in the IP space for semiconductors. ARM is number 1.
But when you listen, but I am curious, I mean, when you listen to what executives have said, at least publicly, particularly with the interviews we had yesterday with the CEO, the discussion about artificial intelligence, how integral that is to their growth plans here. Do you not buy into that?
Well, I think technically they are part of the semiconductor industry. AI is going to be a very important driver for the next phase of the semiconductor growth. I think you already mentioned smartphone probably drove the semiconductor growth over the past decade or so. Going forward, it has to be coming from AI, high performance computing space. They are playing a role there, but what I'm trying to argue here is what we are seeing is more like NVIDIA type GPU AI accelerators that's driving that next phase of growth. ARM is in the CPU space, more importantly, mostly in the smartphone space. That's not the same generative AI demand we are talking about today as it relates to NVIDIA. So what I'm trying to say is, yes, AI demand will eventually, that will trickle down to ARM, but it's probably not coming at the rate this kind of valuation is justifying. So I think investors probably need to be a little bit more patient when it comes to how AI is going to drive ARM's growth in the next 1, 2, 3 years.
So Charles, what it will depend on then for growth is increasing royalty rates. How much room does it have to increase royalty rates on, say, a Qualcomm?
Yeah, that's an excellent question here. It's actually one of the key things we kind of want to be a little bit cautious on some of the outlook people are envisioning to justify the current valuation. We know that the units of smartphones, that's the biggest source of the royalty revenue, is not going to have a very strong double-digit growth. Smartphones already reaching the saturation. I would argue actually probably 5 years ago, we are already at that saturation point. So the lever they can pull is royalty rates. But the royalty rate, where they are at, roughly 2 to 2.5%, is already where I think it's probably closer to the ceiling than to the floor. What that means is you already see the dispute between Qualcomm and ARM. I'm not getting into the details, but I think it boils down to the royalty rates.